traders say they expect the central bank of Nigeria to drain system liquidity with various debits, while investors continue to cherry pick on bonds with attractive yields. Ahead of Nigeria's Monetary Policy Committee's first meeting of the year, I have Dumebi Udegbunam. He's a fixed income dealer at UBA. He joins me now to discuss what to expect going into next week. Thank you so much for your time on the show today, Dumebi. Let's track back and see how the kind of week we had this week, this time around, talking about that first bond auction we saw and how things played out.
Good afternoon, Kenneth. The pleasure being back. So this week was also an eventful week. We had a bond auction on Wednesday and also an OMO auction on Thursday. And on the bond auction, despite the CBN offering 150 billion, only 81.57% of that amount was sold, which is 122.36 billion was sold at the stop rates of 7.9 at the 2027, 8.74 at the 2035, and 8.95 I beg your pardon, at 2025 bond offered sold. So this is a clear sign that despite there's so much interest in the auction or in the bond market, the rates are not as attractive or are not at the levels where investors want it to be right now. The investors want higher rates, but the CBN is watching our cost of borrowing. If you remember, if you look very well, our debt to services ratio is at 90%, the highest we've had in a while. So they're carefully watching our cost of borrowing. So therefore, they are comfortable with the rate they are willing to lend. But investors, on the other hand, want a higher rate. At the almost side of the market, we saw 170 billion being sold compared to the 80 billion sold last week, which is a clear sign that the CBN is doing a very strong job to try and mob the excess liquidity in the system. So we saw the stop rate stop at 1.5, 4.34, 7, and 5.74 at the 91-day, 182 and 364-day deals. Although the rates haven't changed from the previous or the past two auctions, but this is a clear sign that the CBN is doing an active or a very serious job in mopping up the system liquidity.
Yeah, quite a lot of liquidity there. I'm talking about the CRR debits and FAC allocations coming in. But I would like to get your expectations for the MPC next week.
Okay, so January, this next week will be the first MPC of the year, and we expect to see rates maintained. Basically, I foresee the CBN or the government trying to see the effects of the previous, cut in rates to 11.5 show effects in the market. After they cut the rates, we saw a resumption in border activities, that is, the border closures. We saw put an end to the border closures and other stimulus packages by the CBN being injected in the system. So we do not expect an immediate effect or immediate action by the CBN to either increase or reduce rates, despite the increase in or the 6-month increase in our inflation figures right now. We however foresee them watching to see, okay, let's go through the first quarter. Let's see how the effects of what we have done so far to ease into the system. Mind you, although we are watching different parameters that have increased, we are seeing an increase in electric tariffs coming soon, an increase in pump prices, which in turn has a direct effect on increase in production and the ease of doing business, which also would increase cost of products around. However, the government is also watching that, but an increase in rates right now in the MPC, we do not see that coming soon. We foresee a maintaining rates right now.